what we're going to be going over here is the installment sales method, and where we're going to be looking at an example here where we have to convert our gross profit as a percentage of cost to gross profit as a percentage of sales. So sometimes you're working with the case here where you're working and you're calculating all your gross profit as a percentage of cost. But when you're using the installment sales method here, you have to use it as the gross profit as a percentage of sales. So let's go look at our example here. And what we're going to be doing is actually recording and how we'd recognize any or realize any gross profit on these sales. So we're going to have installment sales here for 2 years here, 20x1 here and 20x2, and we're given here installment sales 20x1 240,000, 20x2 310,000, and we're also given the gross profit as a percentage of cost here, and that was 25% here for 20x1 and 28% here for 20x2. So that's what we're given. But using the installment sales method, we have to convert over this gross profit as a percentage of cost to gross profit as a percentage of sales. So let's look at our first year here, 20x1. So what you would do here, you know your gross profit as a percentage of costs here. So again, use it as a decimal amount here. The 25%, this is how you'd make your conversion here. You just point 20.25 here for your 25%. Then you divide it by 1 here plus 0.25 or the 25%. So you end up with 0.25 here divided by 1.25. That's going to give you 20% here. So that's how we converted here. Our gross profit as a percentage of cost here of 25% to gross profit as a percentage of sales here at 20%. Same thing here for year 20x2. We're given 28%, so just plug it in here. Put 0.28 divided by 1 here plus 0.28. So we got 0.28 here divided by 1.28. That's going to give us 21.875%. So we did our conversion here. We converted our gross profit as a percentage of cost here of 28% to gross profit as a percentage of sales here, 21.875%. And we have to do that, use the gross profit as a percentage of sales here when we're using the installment sales method. Okay, so the next thing, let's go calculate here how determine our gross profit that we'd recognize each year here for 20x1 and 20x2. And those are going to be based on our gross profit as a percentage of sales and our cash receipts here. So I've got it laid out here for our cash receipts here for each of the years here, 20x1 and 20x2, based on the sales for each of those years here. So let's go look at how we'd gross profit, how we'd calculate it here. So for the first amount here on 20x1 sales of 65,000 and our cash receipts here in year 20x1. So you take your cash receipts here, 65,000 times the gross profit as a percentage of sales that we recalculated here at 20% for year 20x1. That's going to give us $13,000. And then for the sales here in 20x1 received in year 20x2 of 120,000, all you do is take the 120,000 times that gross profit here for year 20x1 here at 20% that we recalculated. That's going to give us 24,000 here. So 20x1 sales here 120,000. We would have in year 20x2 we'd recognize 24,000 here in gross profit here. And then for the last amount here, the 80,000 20x2 sales received in cash receipts in 20x2, simply take 80,000 times the gross profit percentage here for year 20x2 that we recalculated at 21.875%, and that's going to give us 17,500. Okay, so that's our gross profit that we're going to recognize in each of those years here based on our cash receipts. Okay, so now let's expand on that and let's look at how we calculate our gross profit on the sale, on the total sale here. So the general equation is you take your gross profit here divided by your sales. That's going to give your gross profit as a percentage of sales. So to calculate our total gross profit here on this sale, let's just look at what we've done here. We're going to take for the first year here, 20x1, our gross profit as a percentage of sales that we recalculated at 20% here, times the $240,000 worth installment sales here in 20X1 is going to give us our total gross profit here on that sale of $48,000. And then the same here for year 20X2. You take the gross profit on sales that we recalculated here at 21.875% times the sales for the year here, $310,000. That's going to give us $67,812. So that's our total gross profit here for year 20X2. All right, now let's expand on that further here. Say, for example, we have to determine the cost of sales here. So let's look at year 20X1 here. So let's take our installment sales. We know what they were here, $240,000 for the year. Plus, we calculated what our gross profit was here, $48,000 here. So that we know here. We know our installment sales. We know our gross profit here. So the cost of sales is simply the difference between, we know the known amount here, gross profit $48,000, and our installment sales at $240,000. That would give us our cost of sales $192,000. And then the same thing here for 20X2. We know what our installment sales were, $310,000. We know what our gross profit, that's what we calculated up here, $67,000. So the difference is going to give us our cost on sales here at $242,188. So what we're really doing here, the installment for our gross profit really is the difference between the installment sales here and our cost of sales. So we just had to work backwards here to determine what our cost of sales were. And again, our rate of gross profit, that's simply, we calculated that here up above, but that's simply taking our gross profit here divided by the installment sales amount. So for 20X1, that was 20% here, and then for year 20X10, the gross profit $67,812 divided by $310,000 here in installment sales gives us that rate of gross profit here of 21.875%. So the only point is here, we have, knowing our installment sales here, let's look at of $240,000, knowing our gross profit here of $48,000, again for year 20X1, the difference here that I'm showing gives us our cost of sales here, $192,000. So just plugging it in here, and you can determine what your cost of sales are if they're unknown here, based on what your known amount here of installment sales and the gross profit for the year. Okay, so now let's go up and let's look at how we'd recognize our realized gross profit here. So what we have to do is we have to set up these accounts, and we're just looking at how we'd realize our gross profit. So we are going to look here at we're going to have an accounts receivable on our installment sales here, and then we're going to have to set up a deferred gross profit account here as a contra account to our accounts receivable here. So what we would do here, let's just look at our accounts receivable. So what we had here for the, and we're going to only be looking at recording year 20X2 here, simplify it here, just what we would recognize here for 20X2. So our installment sales here were $310,000 here for 20X2 here, so debit or increase our accounts receivable by that amount. Those are the sales in 20X2. And then the cash, we reduce our accounts receivable by the cash receipts that we have here. So for our cash receipts here, 20X, and looking at year 20X2 for 20X1 sales, that was $120,000. So credit or reduce our accounts receivable by that amount here. And then for year 20X2 sales, $80,000. So credit or reduce our accounts receivable here by $80,000. And then our reduction in our accounts receivable, that would have been the cash receipts. Debit or increase our cash receipts here by $200,000. So that's the cash that we collected here in year 20X2. Okay, now moving down to our deferred gross profit contra accounts receivable account here. So what we did here, remember, what we would have, remember this is a contra account here, so we would credit that here for our deferred gross profit that we calculated here for year the second year here, $67,812. So that's what we calculated here. So credit our deferred gross profit by that amount here, and then we would reduce our deferred gross profit account here by the gross profit we'd realize, what we realized through our calculations down here for year 20x2. Remember, that was the cash receipts here of 120,000 times the gross profit rate here for year 20x1, because that's what we received here in year 20x1, those 24,000. So we would debit or reduce our deferred gross profit by that amount here, and then the credit would go to a realized gross profit here on the sales on our income statement. We credit that here for 24,000. So that's for year X1, how we got to our realized gross profit here. And then for year 20x2, that was the gross profit we realized here, 17,500. Simply the $80,000 worth of cash receipts times the gross profit rate for year 20x2 here, because those were sales in 20x2 here, 21.875% for $17,500. And what we would do, we would reduce our deferred gross profit account by that 17,500, or debit that here, and then our credit would go to our realized gross profit on our income statement here for 17,500. So you see what we're doing here. And all we're doing here is getting to the point here where we recognize or realize our gross profit on the sales here for we're looking at year 20x2 here, but we had sales or cash receipts on the 20x1 sales, and then we had to use that 20x1 gross profit rate here, and then any cash receipts here in year 20x, and we also had it for cash receipts we received here on our in 20x2 on 20x1 sales. You just have to match up that gross profit percentage here wherever whatever cash receipts you had, that was have to be based on the year here of the gross profit, or gross profit on those sales. So you can see we had two amounts here for, well, what we did here for the gross profit, we were looking just at year 20x2 here, and that's the case here. We had the 20% here based on that cash receipts in 20x2 on a 20x1 sales of 24,000, and then on the gross profit rate here in 20x2 based on year 20x2 cash receipts here of 80,000. Okay, so that's how you take and you recognize or realize your gross profit. You just set up this deferred gross profit account, which is a contra account to your accounts receivable here, and then you have to start out with whatever your total deferred gross profit on that sales were, and then you reduce it by the gross profit realized based on your cash receipts and your percentage of gross profit based on your sales. So what we've done here, we were just looking at our entries here for year 20x2. Our cash receipts here, they were a reduction to our accounts receivable. We reduced our accounts receivable by our cash receipts and recognized them as cash here. And then the profit realized here, that was through this deferred gross profit account, which is a contra account to our accounts receivable here. And then you see what we've done here. We had a credit amount here, and then we debited or reduced our deferred gross profit by the amount of profit that we recognized each year here, and then our deferred debits to our, or reduction to our deferred gross profit here goes to a realized gross profit on our income statement. Okay, so that'll take care of our example here, and this is the case here where we had to convert our gross profit as a percentage of cost that may have been used for our calculations. We had to convert it over to a gross profit as a percentage of sales. Okay, so that'll summarize our example.